Eurozone investor confidence improved sharply in January to the highest since April 2011, according to today's Sentix report. Luca Jellinek of Credit Agricole CIB is on the phone now to see whether today's figures match up to reality. Luca, today's data is quite the turnaround from December's surprise dip. What are the drivers for this U-turn in sentiment, and does it line up with market indicators you're presently noting?
Well, it certainly matches fairly closely what we're seeing in, broadly speaking, in the currency, in the equities market, in tertiary spreads. I suspect that the December figure was a little bit influenced, maybe excessively influenced by the taper, which was a little bit of a surprise, but also by some of the a bit of a backlash from the U.S. political stories earlier in the fall, and some of the noise that we had in productivity and output growth in places like Germany, for instance, which has been one of the stalwarts for growth. But I think the important thing for investors is to keep the eye on the main trend, and the main trend is for continued improvement in the economy globally and within Europe as well.
We are currently seeing an interesting economic cycle between the Eurozone and Germany. Angela Merkel recently commented that a permanent Eurozone crisis solution is vital for Germany. However, it was a drop in German production data which caused an unexpected fall in December's Sentix figure. In the economic game of chicken and egg, who must improve first?
Well, there's no doubt that Germany remains one of the main traction engines of the European economy. Longer term, the rebalancing of growth in some of the periphery countries, of course, does pose a competitive challenge to Germany, and I think it's one that they need to address. Of course, the coalition deal that was reached in Germany between the Socialists and the Christian Democrats has been commented by some as being less pro-growth, less pro-flexibility. I think it's a little bit earlier to say that Germany is going to be, a drag for Europe. But perhaps by the end of 2014, it will no longer appear as if it is the only or the main engine, and that is not necessarily a bad thing.
The euro was trading up against most major currencies ahead of today's report. In what is a very euro area heavy week, what can we anticipate from the single currency?
I think one of the lessons of recent trading in FX and also in sovereign risk is that with growth accelerating globally and the first evidence, the strong evidence of like we were saying, rebalancing in the euro area, in relative terms, I think a lot of the euro area economies are perhaps not looking as bad as they did even 6 months ago or a year ago. And I think that's going to be supportive. Let's not forget that the U.S. is beginning to taper the amount of paper printing they're doing, but they're still printing paper. The U.K. hasn't for a while, but they did do an awful lot in the past. So in those terms, the euro still looks like quite a conservative currency with slowly but certainly improving prospects. And I think that's going to be a source of strength. Whenever the market has a lack, I suppose, of major central bank policy changes, and that's certainly the case this week and next week. We're not expecting anything dramatic from the ECB.
And that brings us nicely to my final question today, as today's optimistic report does act as a precursor to the ECB rate decision taking place on Thursday. You say no change?
No change for the ECB. I think from the macro point of view, since we're no longer going to see disinflation going forward, but rather a bottoming of the inflation rate and then slowly a rise, the main focus for the ECB will not be so much the macro situation, although of course it's still delicate, but rather trying to address the still excessive fragmentation of the banking system in Europe, and that's more of a micro intervention, and it will take a little bit more time for them to put everything in place.
Luca, many thanks. Stay tuned to find out why the global tech market looks set to shrink, all that and more on Dukascopy TV. Goodbye for now.